so like a graph. And when you map these 5 projects.
You see 111 Menarung sitting clearly up in the top right corner. Highest price, highest prestige.
Yeah.
Makes sense.
Then Bangsar Hill Park and the Lantern, they're kind of in the upper middle. Premium price, high lifestyle or prestige element, but maybe not quite at that absolute ultra-luxury peak.
That's right. And then down in the bottom left, you find Residency 38 and River Park. Lower price points, focus more squarely on convenience, particularly that connectivity aspect and overall value.
So this matrix, it's not just theoretical sorting, is it? It visually reinforces that these projects are actually targeting pretty distinct segments. They're not all just fighting for the exact same buyer. They're offering different things within that broader affluent market.
Precisely. It shows a level of sophistication in the market now.
Okay, let's dive a bit deeper then into each of these 5, pulling out the essential details from the report's dossiers. First up, Bangsar Hill Park, pitched as an urban resort sanctuary.
Right. Located right in core Bangsar, specifically on Lorong Merah. Yeah. It's a joint venture between Sunsuria and Suez Capital, which gives it, significant developer credibility. It is a large-scale leasehold development, important to note.
And the units. They offer a pretty good range of sizes, from about 917 up to 1,478 square feet. Big project, though, over 1,600 units planned across just the first 2 phases.
Yeah, density's a factor. Price-wise, it's positioned quite competitively for a new launch in core Bangsar. Roughly RM 835K up to RM 1.75 million. That translates to an indicative PSF of about RM 850 to RM 1100.
And the key selling point, the USP, seems to be those extensive resort-style facilities.
Totally. Think Olympic-length pool, comprehensive gym, various tracks, recreational spaces. But it also includes some unique features you don't always see, like pet-friendly amenities, a Revitan shuttle service, and something pretty innovative called Sunsuria Care, basically on-site nurses.
Interesting. And connectivity?
Still strong. About a 400-meter walk to the Bangsar LRT station.
Okay, so for investors looking at this one, the report highlights strong rental appeal, especially to expats, high-income professionals drawn to that whole resort lifestyle thing. Plus, the developer rep and LRT access are definite pros.
Correct. On the investor con side, though, it is leasehold. And that high density means there will be significant internal rental competition among units within the development itself. Plus, those extensive facilities probably mean potentially high maintenance fees, which impacts your net yield.
Right. And for residents thinking of living there, pros are obviously that unmatched resort lifestyle, the potential for a self-contained community feel, great connectivity, and those unique pet and wellness features are quite appealing.
The cons for a resident would mirror some of the investor points.
Yeah.
High density, the leasehold tenure might be a factor if they're looking for a very long-term family home. And yeah, potential traffic congestion on Lorong Merah during peak times could be an issue.
Okay. Next up, 111 Menarung, positioned as the pinnacle of freehold luxury. Sounds exclusive.
It is. Developed by BRDB, a name that's absolutely synonymous with high-end residential in Bangsar. Located right on Jalan Menarung, it immediately likes the Bangsar Shopping Center, BSC.
It's prime spot.
Prime spot. It's freehold. Yep. And the density is ultra low. Only 111 suites in total. That's tiny for a new development.
Wow. Okay. And the unit sizes reflect that luxury positioning, I assume.
Much larger. Significantly larger, yeah. Ranging from 1,001 SQA all the way up to a huge 3,714 SQA. And the price tag, well, it matches the exclusivity. Starting from RM 1.76 million up to over RM 7.3 million.
Okay, so that puts the price per square foot firmly in the most premium bracket, RM 1,500 to over RM 1,900 PSF.
Easily. Its USP is pure exclusivity and prestige. You get the freehold status in this absolutely prime core Bangsar location, the ultra-low density, and that established high-quality BRDB brand. Plus, it benefits from just a 50-meter covered walkway straight to the MRT Pusat Bandar Damansara station.
And facilities.
Sophisticated, highly curated, focused on privacy and luxury thing, rooftop gardens, infinity pool, private lounges, that kind of thing.
So for investors, the report sees this as a kind of blue-chip asset, primarily for capital preservation and long-term appreciation, maybe.
Exactly. Freehold, ultra-prime, low-density BRDB. Ticks all the boxes for a stable, desirable investment, attracting top-tier tenants who want that ultimate luxury address.
But the downsides for investors are pretty clear, too. Very high entry price means rental yields will likely be compressed, right? Capital growth is probably the main play.
Definitely. And it caters to a very niche tenant market, which could mean longer vacancy periods between tenants compared to something more mainstream.
And for residents, living here offers, well, the absolute ultimate in prestige, privacy, luxury. It's a real statement address. unbeatable convenience with BSC and the MRT right there. Seems ideal for affluent downsizers wanting space and location without landed property upkeep.
Spot on. The main con for a resident is simply the significant financial commitment upfront. And maybe while the location is super convenient, the immediate surroundings can be very bustling, being right next to a major mall and busy roads.
Okay, let's look at the Lantern Bangsar next. This one focuses on boutique exclusivity and design.
Right. This is a freehold service residence. Developed by CDC Asset Management, they're Taiwan-based but established here. It's also characterized by low density, only 180 units in a single tower. Located on Jalan Abdullah, so firmly within core Bangsar.
And its USP is a mix of things. Architecture, low density, freehold, transit access.
Yeah, it's that blend. The building itself is designed to look like, well, a lantern. It's by an award-winning design firm, gives it a distinct identity. Plus, it's about a 350-meter walk to the Bangsar LRT. So, good connectivity, too.
And the units are more compact.
Generally more compact and practical, yeah. Ranging from 561 up to 192 square feet. And interestingly, it includes versatile dual-key unit options.
Ah, okay. Where you have basically two separate living spaces under one title.
Exactly. Often with separate entrances. Very flexible. Prices are in the premium range for a boutique freehold, roughly RM 720K, up to RM 1.12 million plus. That translates to about RM 1,220.50 to RM 1.12 million per square foot.
Facilities sound more refined, functional, focus on shared spaces like a rooftop lounge.
That's the description. Rooftop lounge and garden with views seems to be a key feature.
So for investors, freehold, low density, prime core location, all big ticks. The smaller units, especially the dual keys, should have strong rental potential for professionals, expats working near KL Central or Mid-Valley, right? Easy commute via LRT.
Yeah, and the unique design could be a differentiator in the rental market, too. Could attract a certain type of tenant.
But the report flags a potentially significant con for investors. A high estimated maintenance fee, around RM 0.65 PSF, that could definitely eat into the yield.
It could, yeah. That's something investors would need to factor in carefully.
And for residents, the pros seem to be the appeal of living in a cool, design-centric building, that sense of exclusivity, more intimate community feel, and the walkability is outstanding. LRT Talawi area offers a genuine car-light lifestyle option.
Cons would mirror the investor view, those potentially high maintenance fees, and for the price, the units might feel a bit compact compared to other options. Plus, potential traffic on Jalan Abdullah might be a factor for some.